Good afternoon, folks. I'm Scott, a director of London South East. You probably better know us as the private investor portal, which is lse.co.uk, for all your research needs and everything else. Particularly pleased that we've partnered up with Rajan Dhall, who's a market analyst, an expert in what he does, and actually got a talk for you this afternoon of an educational basis. This is actually a technical seminar, which is finding value across asset classes using volume profile and level 2 data. If Rajan actually finishes the presentation a couple of minutes early, we will take questions from the audience as well, so I'll run around with a mic. But in the meantime, I'll hand you over to Rajan. Enjoy and your education.
Thanks, Scott. Okay, perfect. Just hopefully everyone can hear me okay. And also, if there are any spaces, you might need to be able to see the slides. So if there are any seats further, if you can't see them too well, then yep, just feel free to move forward. Okay, so I'll kick off with the presentation. So obviously it's about level 2 data and how to relay level 2 data with charts. So for those of you who don't know what level 2 data is, it's generally the order boards, also known as the depth of market, okay? So who am I and what do I do? So like I said, my name is Rajan Dhall. So brief background on my history. So I worked as an FX broker and an options broker previously in the past, which has helped me with this subject today because we get to see the order boards on the various trading platforms that we used for selling options on foreign exchange. Then I worked as an FX analyst after, basically sending out research notes and investment papers to some of the biggest hedge funds and institutions in the country. Then after that, I worked at a hedge fund where I trade purely using ladders and order flow, again, which will help you guys today if you do have any questions for me and how I specifically used to trade using the ladders. And all the while, I work for the Society of Technical Analysis here in the UK, where we do advanced charting techniques. I mark exam papers for them. I help them with their general social media and the content that they provide. And I also now work as a multi-asset analyst, which is why I look at a lot of shares in the UK and also European shares, and specifically I look at sectors. So what is level 2 data? So the whole point of it is to see orders awaiting in execution for buying and selling on the size of the order book as well, and analysing the movement in a price and a security. So if you've never seen it, I have some slides up that can show you specifically what it is. But effectively, you have two sides of the market. You have the buyers and sellers. So let's take Lloyd's for an example, so Lloyd's Banking Group. So on the order book, you will see how many bids are lying in wait for buying and how many asks are lying in wait for selling the shares. Now, there are transactions that are made around this, which are spot transactions, but like I said, I'll show you how that works. So the benefits of it is being able to monitor fast-moving markets. So I work at a data provider. So essentially what happens when we do see data being released, you guys might all be familiar with like non-farm payrolls, UK retail sales, or these pieces of data, price can fly around and move very, very quickly. So the whole point of looking at the level 2 is basically being able to see who's transacting at what size and where. Identifying trading opportunities, which is the reason why you're here. So using technical analysis techniques and using order flow, you can see where certain levels are within the market where buyers or sellers are lying in wait. Yeah? And again, I'll give you examples of this. Helping identify Iceberg orders, which are filtered orders, and their automated trading patterns. So now big banks, large institutions and hedge funds, they don't really want retail investors or other traders to know where their orders are in the market. Now this is key. So Iceberg orders, what they do is, let's say a very large institution has a large amount of money they want to sell in a position, they won't just dump all those shares at once. So they'll filter them within the market at different prices and they'll aggregate their price level, and that's the where that they'll take their sell position out of a market or put in a buy position at a massive size. Next one is utilize a variety of market indicators to help make better informed decisions. Now, what I mean by this is if you have a level in mind where you're looking to buy a certain share and you don't know about any of this, you could come in too early and the price could move against you lower and lower and lower. But if you did have the data in hand, you could see where maybe some larger buyers are below price at the moment and try and time your trading decisions in line with theirs. And then the last one on this slide is become a price maker as opposed to a price taker by deciding what price to buy or sell and placing orders directly within the exchange is booked via direct market access. So LSE.co.uk, London South East, they offer direct market access directly through the London Stock Exchange. So these orders go directly through there. So if, for example, I place an order, I can see it in the order book. If you place an order, I can see where your order is in the order book. It will never say a name or a place or a time unless you're a market maker, but obviously you can go push direct into the markets from there. Perfect. So where did the charts come in? This is kind of my domain now. So reading level 2 screens, validate breaks of key technical trends and analysis levels using support and resistance and price patterns. So my point of this is, let's say we've got a share, and I'll use a nice easy example. So say the share is moving up and trading towards 100 pence. And you want to see if 100 pence is going to be broken. But the thing is that if it's broken and it's not broken through a lot of volume, there's not a lot of momentum behind that move. So having the level 2 market access data, you can see how many buyers are pushing through that certain level, at what velocity they're pushing through that certain level. And for me, that's a very important indication of how many people are behind it and whether the move is a real move or whether it's a false breakout or a fake move. Yeah? Second one, breakout trades, a very common strategy for trading markets. Now, I must admit this is on a lower time frame, so you need to have a lot of time to be able to stare at the level 2 data and to use this. But if there is a certain level where there is a support and resistance or a consolidation range, what you need to see is that a lot of traders, and in actual banks and hedge funds, etc., they will look to see whether the market, all of us, believe that price should break out of this consolidation range or whether it should range up and down between that consolidation range where there is no market bias. So breakout trades are a very common trading strategy, but you can use the volume data to see the speed in which it pushes out of a consolidation range. And number 3 on this slide is level 2 market data can help you assess if the breakout is real or false, which is essentially what I explained earlier. So if price does break out of a range with decent velocity, decent size, decent volume, you know it's real. So onto the charts. So this is what it looks like. So this is a classic setup for Lloyd's. And what are we looking at here? So I just want to explain the chart and the level 2 data. So first of all, the chart. So I use, this is my setup, so this is basic candlestick charts. On the right-hand side, where you see this bell curve in blue, that is volume profile. So this tells you how many contracts are traded at what price, okay? Down at the bottom here is how many contracts are traded at what time. So they're two completely different things here. So at the time at the bottom, you could see maybe the volumes tailing off towards the end of this chart. But where price is at the moment, you can see there's a lot of shares being transacted at that price, right? So what do I mean by this? This helps you work out where the market feels mean value is at what price. So a lot of people during this day, this is a very small time frame, it's a 5-minute time frame chart, at about 69 on this chart for Lloyd's TSB, a lot of people believe that this is where price should be because this is where the market transacts the most amount of shares at that one specific time. Okay? So what else could I mean by this, or what could we be looking at on this chart? So if price moves down and there's not a lot of volume there and there's not a lot of volume at price, you know that there aren't many traders transacting at that price level. Now, where did this filter through to the right-hand side of this slide? Is you can see the depth, which is on the left-hand side. I'll just move over for you. So just here. So these are on the ask side, on the bid side rather, and on the other side of it, where it says depth there, that's on the ask side. So this is how many options or how many people are lying in wait to buy or sell this security, so Lloyd's TSB. Now, one of my favorite parts of this is the far side here, and this tells you how many live trades are being traded. So like I said, not everything is going to be on the order board. So what you're going to have on the far side is a tick-by-tick basis of who's transacting shares and the amount that they're transacting by and the time. So I'll go through this. So right here, at 12 minutes past 12 when I took this slide, at a price of 69.07, 1,000 647 shares were traded, and it's got the value at the end there. So if your bias is sell on this particular chart because it's moving lower, and you can see the price is moving lower and the shares are being transacted, the price is moving lower and lower, and there's a lot of volume behind it, your idea is vindicated by the volume in the market. Okay? So I'll give you specific examples of trades now. So this is Vodafone. So I've chose Lloyds and Vodafone because they're the two most traded shares in the FTSE 100. So that's the reason why I chose these two stocks. So looking at price here. So we're seeing price coming up to an important support level that I've put in my chart. And the way I pick my support and resistance levels are on the higher time frame, and then I go down and filter through the lower time frames to see if they're still valid on those lower time frames. This was clearly still valid. The reason why it was valid, because it was the opening of the gap up into here. So that's a bit of technical talk. You can ask me questions about that at the end if you like. And then it was well respected once and another time. So I'm looking at this price, and I'm waiting to see at this level how many people are lying in wait to purchase or how many people are lying in wait to sell. This is how the order board is good, because it tells you here that there are 70,000 contracts waiting at that level. So this is obviously here you've got the price, and here you've got the amount of contracts, and here you've got the time roughly where it was executed. So just here where price was at the moment was 210.88, and my price level was at 210.65. So I know that it's not only me that's thinking this. There are other people in the market that are thinking this. Okay, on to the next slide. So price then tested the support level and then broke higher. So this is after I identified that level. What happened? Now, I must admit, you guys need to be wary about your stop loss levels and what you're doing in this market, because often price tests through to see whether these levels are validated or not. You can have a hunt for stops or whatever you want to call it by price going through the levels. But what specifically happened, it hit that level and it bounced instantly higher because we had 70,000 contracts trading there and a lot of people who trade like me looking to see whether that level will be respected or not. Okay? So, moving on, how do we combine the two? So me, I lay them side by side. I know plenty of traders that only look at the ladders, they don't need charts. But for me, the visualization of the charts helps me work out where those levels are in the market, because obviously I do my analysis on the higher time frames. So I also use an alert system. So I'm not just going to look at two stocks throughout the day, Lloyds and Vodafone. I'll look at hundreds of stocks. So what I do is I use a charting package that allows me to set price alerts. So when price gets to a certain level that I'm looking at, my screen will start flashing and say, go and look at that chart. And that was on the charts that I showed you before, and I'll explain to you what they do. So volume profile and level 2, they go hand in hand. So volume profile is the volume at price. Level 2 data is the volume at the time. Now, using the pair of them together, I feel like is perfect, and I'll show you how I do that in a minute. And how can we use them together? So, this is an example here where this is for Shire, by the way, who've been very in focus because of Donald Trump. At that level where I've put the arrow in, we've got 89,000 contracts looking to be traded. In value rather, so 89,000 in value, so it's 1,920 contracts. But look at the average amount of contracts that's traded normally. So you've got 23, 56, 144. That's nowhere near that 1,000 or nearly 2,000 contracts. So I can see that there's somebody that's come into the market at that price of 4,650, spot 95, and that level looks like it's going to be important to me. Now, I'm not saying to you that it's going to be a buy or a sell order. So this might be somebody that's trying to push the market through here. And this was my theory because I'm a chartist. So I looked at this price pattern and I saw markets broke lower 1, 2, 3 times. It came up and it rejected these higher prices here of 4,659. And it looks to me like it's going to break through just based on the candlestick setup. And then also looking at the volume profile on the right-hand side of the chart, I can see that it's in value at the moment. And to me, that looks like it's rejected the value area that it's in right now. So I'm looking to find value lower down, basically. And also, the other thing is the volume at time over here at the bottom. You can see as it pushed up, there's not much momentum on it. There weren't many people thinking, okay, price is going to go up, I'm going to follow behind it. And on the volume and on the level 2, it's not telling me that either. So going forward, we had the first break. So on the first break, you had those shares traded in this price level here. And now you can see the numbers creeping up. So you can see like 100 there, 200 there, 147 there, 100 here, 200 here. You can see more people are filtering behind this move. So I'm not saying to you that it does take a certain amount of interpretation. You do need to learn about it a little bit. But you can start to see that as it broke through the price level, more people are getting behind this move. Yep. Subsequently, it came down. It tested a previous value area on this side, and it's moved back up. So you can take a trade setup like this on a breakout of a support level down to the next value area, and you can get out. It just depends how you trade. And you can see here, the volume was a little bit thicker than there. So you have to keep an eye on that and how that works as well. So that's just an example of how you could use volume 2 data with charts. So moving forward, how to use them to trade. So recognizing and trading off iceberg orders that can be identified on a level 2 screen. An iceberg order is a large single order managed by an exchange that has been divided into equal quantities that is being used by an automated program for the purpose of hiding an actual order quantity, which is what I explained earlier. And this can hold back the share price at specific price levels when the price gets to the level, so look for clues. So look in this one, it was for Shire as well. So at the same time, so look, 14.59.41. So at the same time, nearly at the same price, well these ones were, this one wasn't, look at the values. So you have to look for clues. It's quite clear that somebody has divided the amount of shares they're selling into equal chunks here. I think maybe disregard this one, but right here, 4 equal chunks, because they don't want you to see the size of their trade going through. If you add all of those trades together, it's going to be obvious. We're going to see another one of those things on the level 2 where you've got 2,000 shares being traded at one specific time. Sometimes I've seen, even on Shire, in this example, sometimes I've seen people selling 5,000 shares at once. But people don't want you to know that, so they'll filter these orders in at once. But if you see this happening on level 2 data, you know that it's an iceberg order, basically. So, I'll take any questions that you guys have. It could be about the charts, it could be about the trading, and it could be about the level 2 data. I don't really mind. But if you guys have any questions about level 2 data, how to use it, where it comes from, please feel free. Just give me a second, let the guy bring the mic over.
Do you think the level 2 data is most useful for very frequently traded companies or sparsely traded companies?
On the smaller cap companies, I would say it's useful on a higher time frame, purely because when big players are transacting, you'll see it happen at a certain time, and you can scroll back through the trades, right? So you can see when, usually about 9 o'clock in the morning or about 9:15 or something like that. If you see large shares being transacted at that time on small cap companies, then that can give you an idea of where a share price might go if it goes bullish with it. So in that sense, for that. But for the large cap companies that are more high frequently traded, then yes, I do believe it is on a day-to-day, on an intraday basis, more beneficial for them, yeah? So, and yourself, your question?
Yeah, no, I just have a couple of questions.
Yes.
What's your view on the triggering of Article 50 and the effect it'll have on the FTSE and sterling? And I suppose the second thing is what's the cost of the level 2 subscription?
Yeah, perfect. So I'll go for the first question that he said. So what's going to happen with the triggering of Article 50? Now, in terms of cable, so GBP USD, I think a large amount of what's going to happen is priced in already. You guys have to see that a lot of people are factoring the cost of triggering Article 50. But on a company basis, I think the most interesting ones to look at for me are companies like Dixon's Carphone, companies like that. I think they're quite worried about what's going to happen to their costs if cable falls a lot lower. So the deal's done. We're triggering Article 50. I don't think there's anybody that's going to refute that in this room. But what we've got to look at is the trade agreements. And this is going to be an ongoing saga. So country by country, who are we going to talk to? How are they going to deal with each country? You know, that's the key thing. So whenever you hear anything about any of the trade arrangements with any of the countries, then that's the details that I'll be paying attention to. And lastly on that subject is how many people are moving jobs away from the UK to other places. So a lot of the car manufacturers are staying, things like that. Like a lot of the banks are moving. So what sectors are doing what because of what's happening in the UK? That's also a key thing to look at if you're trading shares, because you can look at what might happen with sector decline. Okay? And the second question was the cost. So you guys need to speak to London South East about that. I mean, he's standing there, so you can ask Scott.
Yeah, our level 2 package is $19.99 per month. You can get an annual subscription. Unfortunately, I believe we're one of the cheapest in the industry, and so I'm going to put the prices up, I think. But within that, of course, you get live prices as well. And we have something, if you saw my talk earlier, which is My Terminal, which is a dashboard which everyone seems to love, which is a great tool. So as I said, $19.99 per month via that link.
Yep, any other questions? Good question. So in regards to the tutorials about level 2, I think Scott will let you know that I'll probably be putting some up. I do have some friends in the industry that use it as well, so I can ask them to help me and give me some ideas about something, you know, maybe that I've missed that might not be just the way that I trade it, but they might be able to trade it as well. Yeah?
The talks from Master Investor, certainly the ones we've been very heavily involved in. We had Evil Knievel earlier, and I opened the show earlier at 9:20. They will be on the website. Of course, depends how fast Master Investor can edit and turn them around, but I would hope by the end of next week. So you certainly can look at Rajan's talk again. In a couple of months' time, we're launching our responsive site. No great changes, but you'll hopefully be a real big fan of it in terms of speed and the like. That will also have a more educational bent to it, as Rajan said, more sort of tutorials and things to actually help the trader and perhaps the newer trader, the novice trader, or even if you just want to just simply increase your knowledge and you've been around for a little while trading shares.
Yep, anyone else? We just got one over here, Scott.
Want to? Just I'm looking at the way you speak there. It's probably you're a short-term trader. I was guessing, but there's probably a lot of investors here.
Yes.
What advantage do you think you could get as a long-term investor, normally using day charts, week charts, month charts, to come down to a 5, 10, 15-minute chart? Yeah. Do you think it's worth using level 2 to be able to make your trade that's going to last for months, maybe years?
Yeah, there's one specific way that's absolutely huge. So I'm sure all of you guys follow companies on a long-term basis that have earnings releases, right? So when the earnings releases are coming up, I would follow level 2 data maybe the days, weeks before it's actually happening. I don't want to sound like a conspiracy theorist, but if the data that they release isn't going to be too good and you see a large volume of transactions happening and the share price moves down, then you know it could be somebody who's in the know or somebody who has internal, knowledge of what's going on with that company, or somebody that knows more than us, other analysts, you know. There are other analysts that speak or are customers of this company. If they know that the orders are going down in the company and their earnings are about to be released, then it can give you good clues. It's basically a little bit like being a private investigator. You know, you've got to really look at all of those things that I mentioned. So not only the level 2, but the volume profile and the individual volume done at time, because then you can see if people are flooding away from the shares before the earnings release. I'm sure you're not going to want to be in there. I certainly aren't, and vice versa. So if they're doing well and the company is doing very well and we're seeing more and more money being piled in a week before the earnings are being released, I want to be on the right side of that. I'm sure you guys do. And I don't only trade intraday. I do trade long term as well. Yeah. Anything else? Any other questions? Perfect. Thanks, guys. Thank you.